Hello and welcome to the AIM Summit webinar on next generation infrastructure in the asset management industry. I'm your moderator, Zachary Sefaradi, CEO and founder at Daum Capital. We have over 30 countries participating in this session. Amongst you are institutional investors, family offices, high net worth individuals, and leaders of the financial services industry. Please feel free to submit your questions as they come throughout the session in the Zoom Q&A dialogue you find at the bottom of your screen. If you're joining us on YouTube, please like this video and subscribe to our YouTube channel now. Introducing our webinar partner today, Abu Dhabi Catalyst Partners. Abu Dhabi Catalyst Partners, or ADCP, is a joint venture between Mubadala Investment Company based in Abu Dhabi and Falcon Edge Capital based in New York City. ADCP was established in April 2019 with committed capital of $1 billion US. ADCP has a dual mandate to achieve financial returns while also contributing to the overall development of the Abu Dhabi global market, or ADGM. They seek to partner with top-tier investment firms and industry-leading businesses who would benefit from developing a meaningful and substantial presence and sustainable presence in ADGM. Introducing our speakers today, we have James Muntz, the Chief Operating Officer and Chief Financial Officer of Abu Dhabi Catalyst Partners. We have John Hensel, Chief Operating Officer and Chief Revenue Officer of Securrency. And we have Sven Werner, who's the Global Product Manager of Digital Product Development at State Street. We're going to be having a 40-minute fireside chat, and we're going to be starting off with discussion around thoughts on the legacy operating systems for asset managers in the industry. And this is a question where I'd really like to start with James, given the fact that you've sat on both sides of the fence, really understanding what is the current status quo, what are some of the legacy operating systems that asset managers have, and what is kind of the issue or the challenges that those pose for those that are looking to develop more progressive and cutting edge infrastructure.
Thanks, Zach, and thank you all for dialing in. Thanks for those that saw holiday, and happy Easter to those celebrating. So you and I have discussed this a lot, Zach, over the last couple of years that we've got to know each other. And I suppose when I started out in the asset management industry, you take a lot of things for granted. You send a fax to open an account with your transfer agent, and there's a lot of paperwork involved and a lot of KYC backwards and forwards about understanding who your ultimate beneficial owner is. You go through then how you place a trade and how you call a broker and whether you have to send a trade file and how you report your trade to your custodian. And I think for most of the first 15 years of my career, you just took these things for granted. That's just the way that things worked and operated. Then you start to understand that it's pretty inefficient. You have arbitrary timestamps such as daily NAVs or monthly NAVs or quarterly NAVs, which when you start to challenge some of those assumptions, you start to say, well, that doesn't actually make sense. This is just data points. And if we can have those data points and we can have that live, why do you have to strike a daily NAV? And as we sit here today, most funds in the world still operate under those still generic infrastructure. So you open your account in that same process, typically with custodian banks, with lots of backwards and forwards. You place a trade with your broker. You have to send trade files, normally via Excel or flat CSV files, or sending faxes, and still a lot of instances of how you place your trades. You report that trade back to a settling broker. You send cash on a T+3 or a T+2 basis, which settles versus your security. And that leads all the way through to how your financial statements are audited at the end of that trail, at the end of the year. And I think if we were to do a poll of the trillions of assets in the asset management industry, I would think 90–95% of those assets still follow that model. And it's really then the last 5 years of my career, and with the help of DLT and what we're going to try and talk about today, of actually this doesn't need to be this way. There's a better way of operating that's more efficient, it's safer for clients, and starts to move away from some of these what are now decades old processes.
So Sven, at State Street, the organization has obviously been a critical part of the backbone of the asset management industry, providing a lot of the infrastructure and operating systems for asset managers. Maybe you could add to what James has highlighted as some of the things that asset managers, fund administrators, custodians find frustrating. What are some of the parts of this process that can be ironed out and that can be made more efficient?
Yeah, thank you for that question. And maybe adding to this, so on the one hand side, as James put it, there's a number of restrictions in terms of how markets historically have developed, and obviously as a custodian providing services to a variety of asset managers, you reflecting on the market. So markets set rules, and you have to operate within those rules. But on top of that, there's also a question around duplicated effort. So if you take, for instance, an FX trade, it's not unusual that a single trade would be stored in 20 different copies across the broker, the various exchanges, the custodian, and the like. So there's an issue on one hand side that markets have a certain level of friction, and obviously we will discuss today how DLT could help to make them more digital and therefore more efficient. But also the service providers that are connected to these markets and market infrastructures have an opportunity to improve their processes by reducing the need for reconciliation, or for instance, working towards a single shared source of truth. So if you take some of these core components that DLT could bring, it would, even in the short term, help to address some of the inefficiencies asset managers would experience today.
So before we dive into the DLT infrastructure and how this can improve the status quo, John, if you wouldn't mind highlighting what is the problem that you've been looking to address at Securrency? What is the nail that has that Securrency is the potential hammer for?
Well, I think, and firstly, again, thank you for having me on, and a pleasure to be with you guys. When you look at the problem that James and Sven just outlined, ultimately it comes down to reconciliation of information and the ability to conduct these activities in a real-time, efficient way. So as a market infrastructure company, Securrency is largely focused on automating compliance, automating the back office functions that are associated with the transactions that were just described. And that is not a small task. It's one thing to recognize the benefits of the distributed ledger technology and the global access to an immutable ledger, but being able to take all of these risk measures that have been institutionalized over many, many decades of financial services and begin to bring them into alignment so that they can be performed in a very efficient and presumably real-time way. So what Securrency has been doing is building out a technology solution that is both addresses the compliance considerations, but is also an interoperable solution. And the importance of that is every one of these legacy institutions brings with it a lot of technical debt, if you will. And that technology that needs to be modernized requires a mechanism by which it can streamline processes, integrate with other key participants in the market, and be able to string these transactions together in a very efficient way. When you look at compliance expense, KPMG did a study a little over a year ago that revealed $270 billion a year is spent on compliance globally. And you think about a lot of that is non-value added activity. No offense to those who are performing compliance functions, but the reality is it's not increasing shareholder wealth. And as a result, it's an expense that asset managers need to contend with and other members of the financial services industry. So by tackling this particular aspect of the problem, bringing together legacy infrastructure, bringing together distributed ledger technologies, some of which are fantastic in the areas of smart contracts, and others that are very, very effective in value transfer and in transaction speed. So by being able to bring all of these different types of technology together and layering in the lessons learned of the compliance world, we're able to automate these back office functions and then thereby making the market activity much more streamlined.
And this is something, as working in the asset management industry is just an age-old problem. You have, as you all highlighted, so many different parties that are responsible for tracking and ensuring safekeeping of assets and compliance and so on and so forth. These are not necessarily value generating activities or value adding activities, but if they're done wrong, they can be extremely detrimental to value. Now we've talked about how inefficient some of these systems are, the fact that there's a lot of duplication of effort, but there is typically a trade-off between efficiency and security. Now, in this case, we're talking about potentially the improvement of DLT to this operating infrastructure, where the typical compromise between efficiency and security or safety is not actually necessarily the case. So James, maybe if you could get us started on your perspective on how DLT infrastructure is providing both efficiency, security, as well as helping with cost and helping compliance become more effective.
Sure, and I think you can split it into two parts of efficiency and cost and safety. I think when we came out of the financial crisis in 2009, 10, or whenever it was we finally came out, banks weren't trusted anymore. A lot of financial institutions weren't trusted institutions. And we read a lot about the next generation of investors having more faith in Apple or Facebook. And if you're going to have custodians of your assets and you're going to trade assets, it's a pretty dangerous place to find yourself in, where financial institutions are not trusted first and foremost. So I think that's the starting point, is how can the technology be applied to get that trust back? And I don't think we're there yet, but I think as we move forward, and there's still a lot of challenges from those tech companies as well, of how they can participate in that place. But putting that to the side for now, DLT is that one source of truth. If you are able to really follow the contracts in the right way and know that there's no discrepancy, there's not going to be breaks, there's not going to be fraud in theory, some of these securities, then, and you can build that narrative and you can market that narrative in the right way, then that faith in financial institutions, I think, will return. And I think that's important for a thriving financial ecosystem and economy. And it really does have that ability to remove a lot of those risks and get safety back into the financial system and trust back into financial institutions. And the guys can talk a lot more detail about how it does that. But for me, that has to be the starting point, is building trust with the next generation. And then on the cost side of things, as you said, and I think compliance officers add huge value. They certainly do in our organization and add tremendously to our bottom line. But there are a lot of costs and a lot of inefficiencies here. And you look at all those different component parts of what you as a fund manager have to pay for, from trade execution costs through to reporting, through to the way you onboard your clients, to you market to clients, through to the audit at the end of it. There is a huge amount of sunk costs that can be removed and add value in a different way. And if you can give a better result to your underlying investor in a more trusted structure, then to me that's progress, and vast progress that we need to be focused on.
So Sven, at State Street, I mean, we think of State Street as part of the central custody infrastructure. It's a massive organization. What's State Street's perspective on DLT infrastructure, on how it is helping you add value for your clients?
Yeah, I think fundamentally we see DLT as one of the transformational forces that will be with us for the next couple of years. And so if you look at post-trade services more broadly, for the last probably 50 years, we've gone to various cycles of innovations. So in the 70s, it started to dematerialize securities and bring them in electronic form, but within the central infrastructure. Then you had the need to create these kind of infrastructures that historically have developed in more of the developed markets and bring them into emerging markets. And then you had in the early 2000s the realization, and it was also a reflection of 9/11 and other big BCP issues, the need to create interoperability across all these infrastructures. So no longer good that you have an efficient domestic infrastructure. You also want to reflect that investors now have a global perspective and want to invest in markets efficiently across the globe. And so DLT probably is the latest incarnation of that trend to find ways to deploy technology to solve problems like reducing costs, reducing risks and failure. And also more recently, that's very high on the agenda for a lot of regulators across the world, is this concept of resiliency. So when you look at the COVID crisis last year, a lot of the large organizations, not just State Street, we operated higher market volume, significantly higher market volumes, where most of the staff were working from home. And we've been able as an industry to do this, but you need to push the envelope further and find ways to plan for all kinds of scenarios where, for instance, important market infrastructure would have a BCP issue, and how would we accommodate in such crisis. And here DLT really, and from my perspective, also allows you to go the next step, where you no longer have that single point of failure like today you would have with centralized market infrastructures, but instead you can build in a level of resiliency by having a shared source of truth and a distributed database. So we're no longer having a problem with the single actor defaults, but we can continue operating. So for me, that's a key critical component how we can use DLT to develop markets going forward.
And John, when we look at applying this to the asset management industry, how does this look in practice? Are we talking about a shared distributed, a distributed ledger technology? So we're talking about a shared ledger. We're talking about a single source of truth that is being relied on by the custodian, by the fund administrator, by the fund manager, potentially by investors, with different permissioning. How exactly does it work in practice? Are we talking about, typically blockchains as well, where we have this immutability? It would be great to understand how you envisage this coming to fruition in actual practical application.
Yeah, so Zach, you really framed it quite well there, in that firstly, a lot of the traditional behaviors of investors, issuers, custodians, those roles are going to remain. It's the technology that they're using and the efficiencies that the technology delivers that is what's the transformation. The beauty of this is, in the end, by automating compliance, by addressing the compliance considerations for multiple jurisdictions through very efficient applications of the technology, you have an opportunity to increase exposure to the investment opportunity, thereby increasing access to capital to the asset manager or the issuer of that particular offering. So as we're beginning to roll out these technology products, some of which are being done with some of the world's largest institutions, and others are being done with smaller brokers and smaller traditional players within the market, but using the same kind of technology. And that interoperability that begins to connect liquidity providers to yield providers becomes very, very attractive. And the thing that I think we're particularly excited about here in Abu Dhabi is operating out of the Abu Dhabi global market in an international free zone that has a very respected regulatory framework. It provides a fantastic launching point for asset management platforms, fund management platforms from this jurisdiction. So being able to reach out to a global setting, address compliance considerations across borders, and allow investors to come in from multiple markets and participate in a digital marketplace.
And before we move on, actually, I'd love to understand a little bit more about Securrency and what Securrency is doing in the ADGM now.
Okay, happy to expand a little bit further. So just to begin with, Securrency is a financial services market infrastructure company. So we're building technology products. We're focused on compliance. We're focused on interoperability and delivering digital assets that can support all different types of forms of value, whether it's public equity, private equity, collateralized debt, non-fungible assets, commodities, across the board. The technology supports all of those different types of assets. In addition to being a technology company, we also have captive financial services businesses. So in Abu Dhabi, we have two subsidiaries that are brokerage and fund platform. In the United States, we have a brokerage and a transfer agent. And these subsidiaries are able to use our technology, participate in the market, and begin to roll out functionality that then interacts with other traditional players in the market, traditional custodians, and traditional fund administrators and the like. So it's a great way for us to not only build technology products, but also to showcase those technology products in some of the, I guess, the most progressive financial jurisdictions.
And in progressive financial jurisdictions like ADGM, how are organizations like Abu Dhabi Catalyst Partners and State Street utilizing Securrency's platform?
James, do you want me to take that, or do you want to?
I can go first, and then we can hand over to you. So, we see Securrency as a key component of the marketplace, and the likes of Securrency. There's competitors as well to Securrency, but as we start with that, when we started our discussion, the whole process of how you open an account through to how you audit an asset manager and a trades in asset management is ripe for disruption. And so for Catalyst Partners, as we're attracting businesses here, predominantly on the asset management side for now, but also banks, brokers, looking to support the ADX and the exchange here, looking to build a financial ecosystem. My view is there is a place for DLT in every single part of that process, including how we distribute funds in the future. So as we attract more managers here, the ability to have the right products in the right regulatory format, distributed in the right way, will be the key to this being a successful financial jurisdiction. And so for us, having someone like Securrency in the ADGM that we can point asset managers to, brokers to, other funds to, the ability to tokenize funds or assets within funds, distribute those, the ability to plug into banks much faster, that interoperability between regulators to have, we look at the passporting regime in Europe or how we distribute funds in other jurisdictions. All of that can be supported by this technology. And if we're going to have a successful and deep financial ecosystem, I think we need a lot of talent like the Securrency team to support that. And so for us, as we look to attract more of those businesses, having the right grown-ups in the region, for want of a better term, is key to that success.
So we're a US-based company, a little over 5 years old, but in 2017, we came to the UAE. We quickly identified the Abu Dhabi global market and the Financial Services Regulatory Authority as a great environment for us to build our business and to collaborate with regulators directly. We entered into the regulatory sandbox in early 2018 and have been working side by side with members of the FSRA to really shape the technology and the products that are aligned with the regulatory framework with this jurisdiction, showcasing the potential of the technology and how it can be brought to bear. And we're very fortunate to have had that exposure, and at the same time to be able to set up our businesses here to begin servicing the market. So in partnership with custodians like State Street as an example, being able to service asset managers and serve as a brokerage within the marketplace is part of what we're building here. Having a relationship to Catalyst Partners and the asset managers that their main mandate is intended to attract to this jurisdiction and to build out an ecosystem here is a fantastic resource and a partnership. So we're excited to be able to support the growing ecosystem here, providing asset managers a very convenient path to onboard into the market and allow them to focus on client relations and value creation while we service the back office support requirements that are oftentimes one of the biggest challenges that an asset manager faces, particularly for a young fund.
And Sven, how does State Street, or how can State Street work with within ADGM and with platforms like Securrency to provide a better experience, not only for asset managers, but for the clients of asset managers utilizing this technology?
Yeah, I mean, the region for us is very important. So we've been committed to the region for over 25 years and also opened 2 branches in the ADGM. And so we talked about a little bit previously around the various steps in order to get value out of blockchain. So you need, first of all, an ecosystem. So you need the buyers of your financial products, you need the producers, you need probably intermediaries. And what you're looking to do with DLT is to create a better level of interaction that hopefully is more real time and less risky. And so for us, when we start to look at the promise of DLT technology, it becomes clear you need to really find partners that share a number of core convictions to move forward. So first of all, we don't want to be locked into a particular platform. So we need the ability to work with counterparties that may choose one form of enterprise ready blockchain versus the other one. So you need a level of interoperability that can go across these different DLT technologies. So there won't be one single blockchain, there will be many, and we need to find a way to bring them together. But, and we mentioned this earlier already, the importance of compliance. So we are dealing here with highly regulated products, and you need to make sure that if you are now creating a more effective digital version of your asset, be a fund or an instrument that a fund would be investing in, how can that set of compliance rules, the conditions, how you distribute it, when they're paid, are there any email conditions you attach to your digital tokens? How can these rules live across different blockchain platforms? And here I think organizations like Securrency add value because it allows you to create that level of control that can live and move across different platforms. But not every blockchain in that sense has that, or not every technology provider shares this as a core business requirement going forward. And so for me, that's really the starting point working with organizations like Securrency. Do you find that common conviction around you have to design successful digital services, and then obviously making sure we develop something that we see value in going forward?
Looking at the attendees in the audience, I see a lot of names that I recognize, several of whom I know would be familiar with the ADGM infrastructure, but the majority of whom are from outside of the region and may not be as familiar with ADGM. Now, we've mentioned ADGM, Abu Dhabi Global Markets, several times throughout the session. It's where I believe everyone on this call, except myself, is currently based. And we certainly are very interested in ADGM from our perspective and been studying the market for several years. But I'd love to take a deeper dive, possibly with James. What is the ADGM? Why is this an important domicile? Why is this domicile attracting some of the next generation infrastructure that are using technologies such as blockchain, DLT? Why has this become an environment that has really opened its arms to and been able to attract so many organizations that are thinking so progressively about the fund management industry?
Thanks, Zach. So the ADGM is a financial free zone and financial ecosystem and center here in Abu Dhabi. When I came here 2 years ago, the mandate was to try and attract asset managers here, and I was really surprised in a pleasant way about how forward-thinking the FSRA and the regulators at the ADGM had been, especially on the crypto side of things. When we were in Europe, a lot of distrust, I suppose, of what was coming down the tracks and a lack of understanding about how to deal with it. But the ADGM from the get-go got on the front foot and said, we want to attract next generation asset managers, technology platforms, and be open to that and understand how the world's changing, support it and regulate it in the right way. And so I believe the ADGM was one of the first regulators to enact the regulations about how to regulate some of these companies, which is a great starting point for them. And the likes of Securrency, who are looking for jurisdictions, took note of that, and then also see the other asset managers that are being attracted here, the other financial institutions that are being attracted here, and realize that it's a competitive place to do business. And we've certainly seen that over the last 2 years, even with the last 12 months of the pandemic. More and more financial institutions setting up here. The English common law setup makes it very, very easy for, on the whole, Western managers to come here and set up easily. But it's a people business, and we want the right people to attract the right people. And I think that's what you really get out of ADGM is you come and visit it, realize there's some very serious businesses here doing some very serious things with a very forward-thinking regulator who wants to engage, wants to understand what your needs and your concerns are, and work with you to solve those in the right way. So we've only been doing this for 2 years, but we've seen that in absolute abundance since we've been operating.
Now, James, before we move on, I think a key issue for any fund manager considering a jurisdiction, domicile, obviously, again, you hit on the major points: the regulatory regime, the way that the regulator does business, the ease of doing business. These are all points that ADGM hits on. But a key, of course, for anyone is access to capital. Now, this is something where I've seen some very impressive statistics, particularly given the relative recency with which the ADGM has opened up in terms of the amount of capital that fund managers based there have been able to attract. And of course, your organization, Abu Dhabi Catalyst Partner, has been part of that. Maybe you could highlight a little bit more about the assets under management that have grown, the number of funds, and the access to capital that managers have when basing themselves in ADGM.
Sure. Look, I mean, the The AUM has grown from 0 6 years ago to approaching 100 billion in AUM now. I think it's about 86 billion that they have here. The number of funds has grown exponentially. And part of the narrative is, for a long time, Abu Dhabi has been an investor in funds. And those funds have been domiciled in those historic locations for, historic legacy reasons, whether it's the Cayman Islands, Luxembourg Island, or any other number of jurisdictions. And it's really trying to stem that flow to a certain point and say, first and foremost, there's a lot of interest in asset managers and financial institutions, full stop. And can we capture some of that outward investment into ADGM? And we're doing that successfully, I would say. We've got a lot of funds here. We're capturing that AUM. But ultimately, over the long term, it's how do we capture third-party institutional capital from the global institutions into ADGM funds. And the only way to do that is to build faith back in financial institutions and jurisdictions. And if we go back to the comment I made about big banks and the trust in those, we're slowly getting over that with some of the changes to technology and changes to governance structures. There's also, the region has had some blow-ups in the asset management space, and it's getting to show people that no, this is a well-regulated, well-run, safe jurisdiction to do business, and your assets are safe in these funds. And that narrative only comes about with the likes of Securrency, the likes of the global asset managers we're getting to come and set up here, us supporting them, us attracting third-party capital, and then us distributing and raising that third-party capital over time. And we believe that foundations have been laid for that, and over time will be successful, but it's not going to happen overnight, and we need a lot of these market participants here operating to the standards that they do in Boston or London or New York.
And Sven, there's a question here from Supra Prakash Dev, and I'll remind everyone in the session, please bring questions as they come. We'll continue the fireside chat, but I would like to pull some questions from the audience as we go along. So Supra has asked, how do you find a common point to merge the old world and existing processes with the new one, particularly DLT? With cybersecurity and oracleization of the DLT network, how do you bring complete trust? I thought, again, given State Street is currently in the process of working to merge this old world and existing processes with the new one, you'd be very well positioned to discuss some of the common points and how this actually is working in practice.
Yeah, I think that's an excellent question, and probably one of the biggest challenges. So you can't switch off what you have today and move into a brave new world. You will have to work with what's there and build bridges. And the particular where investors, like we see today, will have portfolios that are a mixture between initially the vast majority being in, if you want to call it, traditional assets, and a small but growing percentage in various forms of digital assets. So you have to normalize the experience across these two worlds when they operate quite differently. But in the question was this point about Oracle, which I find quite important. So if you think about the idea that you have programmability, so you could, for instance, have the digital tokens processing certain corporate events, like for instance, the distribution of interest or a dividend automatically at certain intervals, because you could program this into the blockchain. However, you still have to deal with tax, and so certain beneficiaries may benefit from a tax treaty and therefore get a relief at source, whilst others would have to claim their back. Now, how would the blockchain know that? And typically it wouldn't. So you need somebody to provide that level of data into that blockchain environment, and that's typically what's being called Oracle. So you would have to have a trusted intermediary that provides data, knows the beneficiaries, knows their regulatory status, and provides that information in a way that the technology can rely on and process automatically. So that brings new forms of liability, that the information that is fed into the blockchain is correct. And therefore, you may need to have a form of regulation for organizations providing these kind of services. And I think that's something John mentioned this earlier, that intermediaries or custodians will not go away. They will not go away because you still require, if you want a level of trust, that these kind of data inputs are there they are processed correctly. And I think this is where we see the initial need, for instance, for an intermediary in that securities processing world to provide that level of oversight and control. That would be one example where we concentrate on for the moment.
So, John, if I could actually, this is definitely an interesting question from Subra. If I could maybe pass it over to you as well to address some of the aspects of relating to cybersecurity and oracleization.
Well, Zach, as Sven outlined a moment ago, the most important aspect of all of this is the trust component, and the intermediaries that are recognized by the regulators as being the validators of information and or the compilers of information that's necessary to automate a transaction. Being able to bring these different role players together requires a framework that allows for interoperability, whether it is an Oracle, whether it is a distributed ledger, whether it's a local database or whatever it may be, so that information can flow through the value chain very efficiently, but also have the compliance considerations accounted for while that asset moves through the infrastructure. One of the things that Securrency has taken as a premise in the way we've architected ourselves is not to be unique to any one particular ledger. Recognizing not only will legacy databases need to be interoperable, but also to be interoperable with multiple DLTs or blockchains. So, today we're integrated with Stellar, with Ethereum, with Ripple, with GoChain, and a variety of others. And we'll continue to add additional ledgers and additional technologies into our infrastructure as the market requests or requires it. And this aspect will allow for value to move from one environment to another securely in a trusted and compliant way. And that aspect of the compliance-aware token framework, which is a unique part of our intellectual property, which allows an asset to move from one party to another by referencing a policy enforcement point, a rules engine essentially, that ensures that the transaction can only be performed between two known and qualified parties. This begins to create a very, very open environment for participation across multiple jurisdictions. It is not a whitelist solution or a walled garden solution, which is much more centralized. Instead, this is a very decentralized framework that can then translate over into DeFi applications for lending and a variety of other resources. So, we've been basically listening to the industry, listening to particularly some of the larger institutions and recognizing what their problems are, addressing the solutions that would be needed in order to create an open framework that doesn't sacrifice security, doesn't sacrifice compliance considerations, and at the same time increases access or increases market participation.
So you mentioned a term there that I'd like to come back to in a second. That was walled garden. But before we go on to that, I'd actually like to zoom out a little bit and talk about the competitive landscape. Talk about the the different. We talked a lot about interoperability and the different roles and functions that are still and will continue to exist in this future infrastructure. Now, James, maybe you could give us an overview on the overall landscape, the backdrop, the interoperability issues that that exist with legacy systems and might be improved, and potentially touching upon the incentives for organizations to participate in that infrastructure and why some organizations may prefer not to.
Yeah, and the guys might know more than I do. I suppose from my point of view, it links into my background in DLT, or when I started this journey, is we see lots of fund managers, we've seen lots of coins, trading crypto, looking to whether it's compete with FX brokers, be brokers for it, be fund managers for it. And we've just been looking for who's going to be the Swift or the Clearstream for all of these different activity, and it's going to come. And we think the likes of Securrency are going to be some of the winners in that space. But everyone is still trying to hedge their bets, is my sense. The large banks are looking constantly and saying, who's going to win this race? Who's the technology provider we want to partner with? Some are building it themselves, and markets operate well in an efficient way. And it's going to be interesting to see who emerges as the winners. Is Bitcoin going to be the coin? Is Securrency going to be the platform? Who knows? But there's still a lot of hedging going on from the big companies, and the larger asset managers, again, themselves saying, we're going to look to the likes of State Street, have always been our partners in this to tell us what it's going to look like. The smaller asset managers don't care, right? This is an interesting part for them is, smaller asset managers see this as a cost. It just needs to be resolved, and actually it can help them hugely. But they are all looking and saying, well, okay, I know I need an administrator. I know I need a transfer agent. I know I need to onboard clients. What's the process for doing that? And State Street and the likes were the partners of choice that would solve that. And it's interesting to see who's going to win, for want of a better term, that regulatory piece, because really it's going to be the ones that the regulators have the acceptance of that's going to drive who gets acceptance in that trusted partner that we've spoken a lot about. And yeah, it's fascinating. I constantly try and look and see, and it feels like there are 2 or 3 different camps building out at the moment. But I'll let John and Sven comment on where those camps are if they can.
So, Sven, John mentioned the term walled garden, and this is something that I wanted to explore with you a little bit further. I mean, we look at an organization like State Street. The last numbers that I've seen, you can correct me if you have more recent ones. State Street has some $38 trillion under custody administration, over $3 trillion of assets under management. It is a very, very large organization with a very large and prestigious garden. Now, why would organizations, I mean, typically organizations you would think with such a impressive balance sheet, assets under custody, assets under management, would want to build pretty big walls around those gardens, right? And not thinking too much about interoperability and potentially at the cost of efficiency. So how is this thinking potentially changing? Why is it that State Street is organizations like State Street are now thinking about how they can build things more efficiently and potentially going away from this walled garden kind of siloed approach?
Yeah, well, so a walled garden typically is a kind of a closed loop system. So it's highly efficient when you're inside. But if you're trying to change providers, it's difficult because data is difficult to come with you, etc. But if you think about a global custodian in the likes of State Street, what we're doing, we're giving investors access to way over 100 markets globally. And so our service really is, on one hand side, the normalization of that experience, that you can invest all of these assets when the markets and the regulation is quite different, and you try to harmonize as much as possible, both in terms of the experience to the client, but also how you access this market. So we've been participating for many years in various industry groups locally to make sure, for instance, that CSDs have SWIFT and things like that. The need really comes from the perspective that what we're trying to do is being a partner to clients so that they consume various services and products, whether we produce them or somebody else produces them. So that really makes no difference. What you want to do is be able for clients to access those services through you. So when we're talking here about walled gardens and digital services, one example, for instance, this is frequently called out by the regulators around the CBDC experience in China, or central bank digital currencies, because China for many years had digital payments, but only in the form of 2 providers. And so that's now being considered a walled garden. So it's very efficient if you're with one of those, but if you want an alternative, it's very hard. So the issue, I think, that's being addressed now, identified in the connection of walled garden and DLT, is very much around the idea that you don't want to have lock-in into a single provider or a single form of technology. You want to have a form that your token could live on multiple different blockchains, but also that when you're developing services based on blockchain, can support and interact with a counterparty that would make a different technology choice. So I don't see this at the moment so much of a question addressed to custodians. It's really, how do we make sure that that new digital security market that we're developing is open, is interoperable, has certain data standards so that tokens can move freely across different technology solutions. So it's basically, we want to make sure that the new DRTO environment doesn't become a new walled garden.
Yeah, Zach, if I could jump in real quick, James mentioned earlier the Swift, Swift messaging, Swift network, and what Sven was just outlining there is, the value of being interconnected with other venues and other financial services providers. Now, one of the metaphors we use from time to time is for those that are old enough to remember when email was first launched. You had different email service providers. You had America Online, you had Prodigy, you had Hotmail, you had Yahoo and whatnot, but you could only send an email to somebody else who had the same email service as you. And it wasn't until Simple Mail Transfer Protocol, SMTP, came along in the mid to early 90s that transformed. And all of a sudden, bam, we can send email to Gmail, to Yahoo, to wherever. We don't think about it today, but at that time, that was a walled garden. Every one of those little email service providers was a walled garden. And by using a service, ours is the compliance aware token framework. It breaks down these barriers. It allows value to move from Ethereum to Stellar to Ripple, from a State Street venue to a small brokerage to a fund platform or whatever, even on and off chain. So the value can move around and maintain its compliance considerations. That kind of interoperability, addressing multi-jurisdictional distribution control of assets, being able to cross borders and cross jurisdictions, makes access to capital and makes access to yield opportunities where so many people don't have access to New York or London or Switzerland or Hong Kong, different parts of the world that need access to capital markets. So this new infrastructure, these new relationships, this mechanism by which information can be communicated very efficiently is just the beginning. I think that there's a lot of additional innovation that's going to come in the years ahead.
So in terms of barriers to entry, I mean, you mentioned that, that this will reduce barriers to entry for a lot of new entrants. Does that not pose a challenge to the existing organizations that have, obviously reducing barriers to entry means that there's more competition and this, poses a threat to the industry. How do you see this potential threat to certain legacy systems? Which are competitors that should be potentially worried about this technology disrupting their businesses and disrupting their ability to, potentially extract rents from existing systems?
Well, State Street, right? We are a 200-year-old organization. So market change and that you have to reinvent your business models in that sense is nothing new. But just because you have a long legacy doesn't mean you inherit a certain place in the industry. You have to earn it every day. So for us, it's really what we do at the core is we're helping institutional investors to manage their assets and the risk that comes along with that with various products. And now with DRT, the very definition or essence, what a security could be, or how we think about this, or the market in which it lives in, that could fundamentally change. And so we have to therefore change how we provide value in those circumstances. So today, most security markets are structured around a centralized infrastructure, and we provide indirect access into these markets. And what we're saying now is that there could be more flexibility. It would no longer be this scenario of one market, one centralized infrastructure, one custodian. It's multiple blockchains that have their different standards. And you need to take a view as an investor, whether you're comfortable with a certain asset that has been programmed into a blockchain. So in a way, that need of having a trusted partner that provides scalability and market know-how, how certain security markets operate, that would still be valuable. And for me, that's really the core essence. It's another iteration of a long-lasting trend that the market needs more efficiency. It needs higher level of automation, but therefore it also needs that level of insight and partnership that we hopefully can provide in future as well.
And I mean, again, we touched upon interoperability quite extensively. What does interoperability actually mean? Is that interoperability between blockchains, between systems. What are some of the challenges to interoperability that we currently face in order to be able to realize this, this technological change and the implementation of DLT? Either John or Sven, if you'd like to.
So we've covered to some extent already the benefits and the impacts of interoperability. It's a question now of how is the legacy infrastructure going to migrate or transition? There's a number of large banks that you've seen recently making some very visible moves into the DLT space, some of which are really laser focused on a particular ledger. That is both, as Sven said earlier, it delivers some element of efficiency, but it also eventually becomes a limiter. And if you can somehow make your ecosystem so big that you control everything, well, then maybe you come out on top. We have a very different philosophy. When I say we, I mean Securrency. And that is that by inclusion, by including multiple ledgers, multiple financial services providers, and of course, access to multiple markets, that inclusion translates to competition. It translates to increased efficiency and a greater service to the global economy. So it's something that we aspire to by virtue of our approach to our technology and our interacting with strategic partners. That interoperability piece is very, very important. There's a lot of legacy infrastructure, as I said earlier in this presentation, that needs to be divested of. And large banks and large exchanges, they can't just stop, retool, and then restart again. They've got to continue to operate, continue to service their clients, continue to remain aligned with the regulatory frameworks in which they operate. But they need to be able to divest of aspects of that legacy infrastructure in an efficient way and migrate into a different environment. And that divestiture comes through this interoperability component and being able to, through a series of APIs or whatever the integration point is going to be able to transition over to more efficient technology that increases their access to new markets.
So as we're actually almost out of time on the session, and it's been extremely interesting. Thank you to everyone in the Q&A, and sorry I wasn't able to get to all of the Q&A questions, but before we wrap up, I just wanted to kind of go through the panel and highlight what you think the next generation is. If we could wind the clock forward, 10 years, where do you see the asset management industry going? Where do you see particularly when it comes to DLT? Do you see this becoming widely adopted? Do you see it becoming something that's very niche, that's used by smaller players? Maybe James, if you could get us started with, where you potentially see us in 10 years, or where you'd at least like us to be in 10 years in terms of how we've enhanced our ability of servicing this industry using this technology.
Sure. Look, I think where I'd like to see us is it comes down to access. So I touched on the very start of this, the quarterly process for private equity or real estate or venture funds. That's just a legacy issue. Ultimately, if you're able to get to a situation where it's just data points, and those data points are on one trusted source, and therefore you can have the most illiquid securities in the world valued real time, and you're able to trade those in an efficient way and market those in a regulatory compliant way to the billions of people who need saving solutions ultimately, then the world becomes a better place. And I really genuinely believe that DLT has the ability to take what is now very easy for an ETF. We could tokenize ETFs all day long with this currency product, but start applying that to real assets, to non-fungible assets, to pieces of art, to the SPAC boom that's going on here, or whether it's pop music and music rights around those, how we tokenize that, how we provide real liquidity to that, and then how we distribute that to the billions of people that need these products, to me is where I'd like to see us get. And I think we will get there, and it'll be an interesting place to be.
And John, over to you. Same question. Where do you see us in 10 years? Where would you like us to be in 10 years?
Yeah, very much the same as James just described. And I was kind of, as I was listening to him, I was thinking, I don't think anybody mentioned the word liquidity or illiquid for 55 minutes on this panel, which is amazing. That's usually one of the first words that flies out. But the reality is just that it is increasing access to yield opportunities. Increasing global distribution essentially in a safe and secure and compliant way. So where are we in 10 years? I think what you end up seeing is through decentralized finance resources that begin to roll out, you start to see a blending of markets. You see private markets behaving a little bit more like public markets. I don't think that you're going to see it become, all one and the same. But the reality is that those public markets are going to become more liquid. And they're going to be more transactable, very much like public markets are. Additionally, you're going to see, debt products, commodities, non-fungible tokens, and others become much more accessible as well to a broad base of investors. But the beauty of where we're headed with DLT is that these financial instruments are going to be able to be not only, say, yield providers, but also be forms of payment. So being able to transfer rights, as James described it, rights to an asset from one party to another in a compliant way, it doesn't have to be a fiat, or it doesn't have to be, let's say, a commodity or cryptocurrency. Instead, it could be public or private equity that is being moved, or collateralized debt that is being moved between one party and another as a form of payment. So I think this is where markets are headed. We're overhauling back office functionality today. The front end is going to become radically more different. It's going to be much more mobile. I'm sure that mobile applications are going to continue to evolve to support this new market environment, and this blending of assets that become, they become yield providers and they become forms of payment all at the same time.
And Sven, if you could maybe close this out with adding to James and John's comments, where you might see, from your perspective, the industry changing over the next decade, and how this might improve the future of the industry, but potentially actually also touching upon, how this might have an impact on jobs and the people who are working in the industry. Where might there be some redundancy?
Yeah, maybe. It's always hard to project, but maybe if you look in history, so the time when the internet was developed, or the internet protocol, to the materialization of the modern, things, or the business model of the likes of Amazon, for example, it took almost 30 years. And the first sort of live application of blockchain really was, if you want, 10 years ago with the start of Bitcoin. So you could say maybe there's another 20 years to wait. So I would hope it's less than that. But nevertheless, I think what will be important is, on the one hand side, we discussed a lot today around efficiency gain and operational changes that come along with that. But also, which I find almost more interesting, is would the deployment of blockchain and digital assets create a new and better user experience. So for instance, where you could have a fully digital fund, which you can open for your mobile phone, so you have a fully digital experience. And also as an investor, you would be able to really have almost like your own managed account, for instance, through fractional ownership, so that your social preference, your investment preference can really be structured even with small investments. And that would change a little bit how investors today invest for their pension or for their retirement, and here to allow to invest like in a more risk-adjusted and personalized way. And that can only work at attractive cost if we have a digital environment. And I think that will be very important, that we are using blockchain technology not just to make things more efficient or reduce risk, but also to really allow investors to invest in a different way, like they use today through their WhatsApp application, and now to do banking in the same fashion. I think will be a really interesting journey for the next couple of years to go.
Well, thank you everyone for having us on this session and for joining us. This has really been an exciting discussion about how DLT is going to improve the industry. This is something really close to us. Again, I am, certainly excited about the potential efficiency the reduced back and forth between administrators and custodians and reconciliation and duplication of processes is something that I always want to tear my hair out about. And again, I couldn't have had a better panel. Certainly James, John, Sven, so good to have you. Completely different perspectives for addressing the same issue. Again, for everyone that was in the Q&A, I'm sorry that we weren't able to address all of your questions, but we did only have an hour. We've just gone slightly over time. Please do join us on our next AIM Summit webinar coming up in just a couple of days on the 7th of April. It's going to be at 4 p.m. Gulf Standard Time. We're going to be talking about reshaping the cybersecurity landscape. This is going to be with Hera Software Development. If you are joining us on YouTube, please like this video and subscribe to our YouTube channel now. Again, thank you all so much for having us, and thanks for being part of the AIM webinar.